Are you ready for some exciting news in the world of cryptocurrency? Today, we're diving into the latest developments, including OKX's plans to expand their offerings to the Australian market, the potential for equitable cryptocurrency legislation in the US, the SEC's pursuit of additional funding to combat cryptocurrency malfeasance, and the latest update on the FTX legal battle. So, buckle up and get ready for a wild ride through the world of crypto. OKX eyes Australian market, citing insatiable crypto cravings. The Seychelles-domiciled digital currency exchange OKX divulged plans to broaden its cryptocurrency offerings to Australia, a nation poised to embrace the forthcoming crypto adoption wave. In a communiqué dated March 29, the trading platform elucidated that Australia would serve as a pivotal growth sector for the enterprise henceforth. The company currently caters to over 100 countries worldwide. In August 2018, OKX extended its reach to Malta, and in July last year, it procured a tentative license in Dubai. In an official statement, the firm expressed, "Australia is an integral component of this approach and a crucial expansion market. Given the robust existing crypto engagement in Australia, we pledge our commitment to the domestic market and aspire to establish a formidable local presence." Haider Rafiq, OKX's chief marketing officer, divulged that the impetus to penetrate the down-under market emanated from Australians' voracious appetite for additional cryptocurrency investment and trading vehicles. Over the past half-decade or so, I have observed that Australian retail investors exhibit an insatiable hunger for delving into crypto as an investment conduit and for trading purposes. Upon joining OKX, I noticed a surge in web traffic and inquiries from Australians keen to explore OKX's offerings. Rafiq contends that Australians possess an edge in crypto education, which he anticipates will facilitate OKX's seamless entry into the market. Australians exhibit an impressive familiarity with digital currencies, blockchain technology, and the promise they hold for the future. As a corporation, this renders the Australian market exceedingly attractive for expanding our services, he opined, adding, "We believe that our value creation endeavours for Australians will ultimately elevate the entire sector." Rafiq also expressed admiration for Australia's burgeoning crypto startup landscape. Notably, the trading firm has yet to register with AUSTRAC, the mandatory licensing authority for offering digital currency services in Australia. At present, OKX has not divulged the location of its potential Australian office or the size of its local team. The company's LinkedIn page lists over 1,750 employees. Rafiq confirmed that OKX is concurrently pursuing a virtual asset service provider (VASP) license in Hong Kong. This ambitious expansion strategy targeting Australia and Hong Kong coincides with OKX's recent announcement to terminate its services for Canadian clients come June. Equitable cryptocurrency legislation. Feasible in the US, yet requires extensive effort, Crypto Council consultant. Crypto Council for Innovation consultant Sean Lee advocates for increased education among policymakers and financial regulators. Notwithstanding the prevailing skepticism, certain industry executives maintain optimism that the United States will eventually establish fair cryptocurrency laws. However, a Crypto Council for Innovation advisor forewarns that such an endeavor demands significant exertion. Drawing a parallel to the financial reforms instituted post the 2008 financial crisis, Lee asserted that similar measures could be enacted for the realm of cryptocurrencies. Lee averred, "It is possible, it will take a lot of work, and usually implementation comes after a massive crisis, which we have right now." These remarks follow the recent cryptocurrency clampdown by U.S. financial regulators, an act described by some commentators as a war on crypto. The FTX fiasco in November seemingly furnished regulators and anti-cryptocurrency legislators with ample justification to assail the nascent industry. Nonetheless, Lee clarified that FTX is not synonymous with crypto, being merely a centralized trading platform, and added, "Improper regulation of centralized entities frequently results in historical catastrophes." Lee emphasized the crucial need for education, a goal that organizations like the Crypto Council for Innovation endeavor to achieve. The council aims to engage in discourse with politicians, elucidating the current state of affairs and apprising them of the perspectives held by other jurisdictions. This guidance can facilitate the development of more progressive policies, enabling both communities and corporations to better comprehend the regulatory landscape. Sheila Warren, CEO of the Crypto Council for Innovation, echoed similar sentiments in a statement on the recent CFTC Binance lawsuit. She expressed hope that the lawsuit would signify the cessation of opportunistic exploitation of regulatory ambiguities in the United States. Additionally, Warren highlighted the CFTC's classification of certain cryptocurrencies as commodities, terming it a potent warning to the SEC. Concurrently, SEC Chair Gary Gensler recently solicited an augmented budget to address the "Wild West" of cryptocurrency markets, indicating that the so-called war on crypto is unlikely to conclude in the near future. Gensler pursues $2.4 billion infusion for SEC to combat cryptocurrency malfeasance. Gensler accentuates the imperative of confronting the burgeoning malefaction in the cryptocurrency sphere. During the House Appropriations Committee's budget hearing on March 29, Gensler's preordained testimony underscored the exigency of supplementary funding to maintain stride with relentless innovation, stating, "Financial markets' accelerated technological advancement has engendered malfeasance in emergent domains, most notably within the crypto realm. To tackle this, novel instruments, proficiency, and resources are indispensable. The proposed financial allocation would facilitate the enlistment of 170 supplementary personnel, primarily assigned to the enforcement and examination divisions," according to Gensler. The SEC chair emphasized that the preceding year's budget augmentation enabled staffing levels to surpass the 2016 benchmark for the first time. Nevertheless, the regulatory institution remains beleaguered, asserting, "Acting as the market sentinel, we must possess the capacity to counteract malevolent actors. Consequently, the SEC's growth must correspond with the capital markets' expansion and burgeoning complexity." Gensler divulged that during fiscal year 2022, the SEC garnered in excess of 35,000 discrete tips, grievances, and whistleblower referrals, facilitating the initiation of over 750 enforcement actions and mandating $6.4 billion in penalties and disgorgement. Of these measures, 30 pertain to the cryptocurrency sector, culminating in $242 million in fiscal penalties, a 36% increment compared to the 22 actions undertaken in 2021. Bitcoin value temporarily surpasses $29,000 amid Binance controversy. In defiance of mounting crypto restrictions, BTC's price experienced a fleeting surge past $29,000 on March 30, marking a pinnacle for 2023. The valuation of Bitcoin momentarily eclipsed $29,000 on March 30, establishing a fresh zenith for the annum, notwithstanding the latest United States regulatory clampdown on cryptocurrency enterprises and the ensuing ambivalence. Bitcoin's worth attained $29,132.82 on the aforementioned date, revisiting the heights witnessed immediately preceding the implosion of the cryptocurrency exchange FTX in early November 2022. This augmentation materializes despite a gamut of regulatory incursions in recent times, including the United States Commodity Futures Trading Commission litigation against Binance and its chief executive officer, Changpeng, CZ, Zhao, on March 27. Bitcoin's monetary recuperation following such a cataclysmic event has elicited astonishment from numerous industry observers. A faction postulates that the reason for this phenomenon is the speculation that the lawsuit may culminate in only trivial penalties for the preeminent crypto exchange by transactional capacity. The Crypto Fear and Greed Index, an instrument designed to quantitatively delineate the prevailing emotions and sentiments vis-a-vis Bitcoin and additional prominent cryptocurrencies, has exhibited a progressive augmentation over the past month, undeterred by fluctuations in the global banking domain. A contingent of traders posits that the recent price resurgence may be attributed to high-volume traders re-engaging in transactions, which is more pertinent to their purchasing methodologies as opposed to fundamentals. FTX legal representatives. Creditors denounce Sam Bankman-Fried's reimbursement plea for legal fees. The Committee of Creditors and FTX's legal counsel vehemently oppose Sam Bankman-Fried's recent reimbursement petition. Legal representatives of the cryptocurrency exchange and the Committee of Creditors have raised vociferous objections to Sam Bankman-Fried's latest plea for legal fee reimbursement. As previously disclosed by Cointelegraph, Bankman-Fried's attorneys submitted a motion on March 15, petitioning for coverage of his court expenses by directors and officers, D&O, insurance policies. Approval from the presiding magistrate would position Bankman-Fried atop the disbursement hierarchy. In an objection filing dated March 29, FTX's legal team decried Bankman-Fried's endeavor to prioritize his legal expenses over other potential claimants, contending, Permitting Mr. Bankman-Fried to deplete the D&O policies for his exclusive advantage would be unjust, iniquitous, and antithetical to the principles of justice. FTX's legal team maintains that, should the court rule in Bankman-Fried's favor, insurance payouts must extend to other directors and officers with legitimate claims to the funds. On the same day, the official committee of unsecured creditors submitted an objection, stating that D&O insurance policies are applicable solely when honest decisions are made in the ordinary course of business, a criterion that Bankman-Fried's request ostensibly fails to meet. The committee contends that the court should consequently deny the request, branding Bankman-Fried the purported architect of one of the most significant criminal frauds in recent history. Members of the crypto community have previously echoed this sentiment, prior to Sam Bankman-Fried's petition. Directors and officers. D&O, liability insurance, is a specialized coverage form that safeguards individuals from personal financial losses resulting from lawsuits arising from their roles as directors or officers of an organization. Companies can also utilize such policies to indemnify legal expenses and costs incurred due to litigation against former officers or directors. However, the Creditors Committee asserts that Bankman-Fried has failed to substantiate his claim to the $10 million in available coverage, which should instead be allocated to offset FTX's losses. Per reports, the erstwhile FTX CEO is presently defraying his legal expenses with $10 million he had earlier bequeathed to his father, Joseph Bankman, after obtaining a loan from Alameda Research. Sam Bankman-Fried faced a 12-count criminal indictment on February 22, encompassing multiple fraud charges, which increased to 13 on February 28 amid allegations of a $40 million bribe attempt involving a Chinese official. Thanks for tuning in to this episode of Crypto Catalysts. We hope you found the information informative and insightful. Stay up to date with the latest developments in the world of cryptocurrency by subscribing to our channel and hitting the notification bell.